Ladies and gentlemen, good day and welcome to VST Tillers Tractors Limited Q2FY25 post-results conference call. From the management side, we have with us today Mr. V.T. Ravindra, Managing Director, Mr. Anthony Sarkara, Chief Executive Officer, and Mr. Nitin Agarwal, Chief Financial Officer. At this point, all participants' line will be in the listen-only mode, and there will be an opportunity to ask questions after the management presentation and opening remarks. Over to you, sir.
Good afternoon, everyone. My name is Nitin Agarwal. I am Chief Financial Officer. We'll start the discussion with a brief presentation and then open up for the question and answer session. This is the safe harbor statement. In terms of content for today's discussion, we'll be covering first the sales volume for this quarter and financial result for the quarter. Then I'll also give you a view on H1 sales volumes and how the H1 results have been, and then update on the October monthly number. The first slide is about sales volume for SFM, which is Smart Farm Machining Division, which is basically tillers as well as tractors. So in terms of power tillers, in Q2 financial year, we have sold 11,236 tillers, which was 10,729 in the same quarter last year. So there's a growth of 5%. Tractor industry, we have sold 1,306 tractors this quarter. Power weeder segment is giving a good growth, I would say. 1,779 power weeders we have sold in this quarter compared to 1,337 in last quarter. Also 598 of reapers. The next slide is the P&L for quarter 2. So in current quarter, we have revenue of 283 crore, which was 278 crore in the same quarter last year, at EBITDA of 64.55 crore. As a percentage, EBITDA is 20.81%. But in the EBITDA number, there's a major portion of other income also. So for operational tracking and operational performance perspective, what we track is operational EBITDA, which is calculated by excluding the other income completely. So at an operational EBITDA level, we are 13.33%. Profit before tax for the quarter is 57 crore, which is as a percentage to sales is 18.5%. Moving on to the H1 volumes. So for the power tiller segment, for current half year, we have sold 17,000 units as against 19,800 unit in the last half year. Tractors are around 2,600 tractors. Power weeder 3,490 compared to 2,200 in the last quarter. Also 632 numbers of reapers. The next slide is about profit and loss statement for half year. So for half year, for this current H1, revenue from operation is around 474 crore and EBITDA of 99.25 crore, which translates into 19% of EBITDA. At an operational EBITDA level, we are 51 crore rupees, and in terms of percentage, it is 10.8%. PBT is 85 crore for the quarter, which translates into as a percentage 16%. October number has been encouraging for both power tiller as well as tractors. In the month of October, we have sold 1,783 tillers as against 1,200 in October 23. Similarly, for the tractors, we have sold in the month 680 tractors, which in October 23 it was 289. So this is the brief overview presentation. Now we open the floor for question and answer.
Thank you, sir. We will now begin the question and answer session. For participants who wish to ask a question, I request you to please raise your virtual hand. Alternatively, participants can also type in their questions into the chat box. We will wait for a moment as the question queue assembles. The first question is from Mr. Ashish. Please unmute and ask your question. Mr. Ashish?
Yeah, can you hear me?
Yes, Ashish. Yes.
Yeah. Thank you for this. So, sir, if you could kind of update us on the several initiatives that we've been taking over the last 3 years on the tractor side, and there's a certain guidance on the path to achieving a certain growth that you'd given for the next 2-3 years. So, where are we, the softer aspects of it on the market development and acceptance of these tractors, and how you have fared till now, and what's the picture like going ahead?
Yeah. Good afternoon, Ashish. This is Anthony. Happy to share the details. So, in tractor specifically, we had taken 2 to 3 initiatives. The number one being our entry into higher horsepower tractors with VST Zitor JV, where we launched the products in May of this year, May 2024. Very happy to state that the scale up is happening and it is going as per plan. This year I had indicated we should be doing around 1,000 numbers. We should be around that number by the end of March this financial year. The second big project that we had undertaken is consolidating our presence in Europe through the launch of new products in tractors. That is also going as per plan, and we are further launching products in the coming week in EIMA, Italy, where we are launching stage 5 30 HP tractor for the first time in Europe, and which will be very soon followed by a 35 HP project. These were 2 projects that we had planned for this financial year for Europe, and that is being launched as per plan. And this should give us the volume planned growth in Europe by the end of March this financial year. The third project was the long-term plan which we had announced in terms of entering into the US market for tractors. That is going as per plan. The company has already been registered, as already informed to you. Product development, which is a completely new platform, wherein we are launching 6 variants and almost 6 models and almost 16 variants, which will be launching in the next 2 to 3 years, all in the compact tractor space. This should give us the volume growth and the plan of achieving the aspirational financial figures that we had announced. So all the plans are as per plan. Execution and monetization is happening with full fervor, and that is a brief. And just one more addition I would like to make, that we have made our entry into the northern markets. This is something in terms of the new markets that we are entering. So in the northern markets, very happy to say that in the first half of this year, we have been able to appoint 56 dealers, and majority of the sale of VST Zitor as per plan is happening, as per seeding plan and progress is happening in the northern markets.
Okay. It's good to hear that, sir. So, see, the distribution recruitment for the Zitor products, there's been, I mean, we've spoken, I think, last year we've spoken on the calls. So, what is the expectation? I mean, given the numbers that you had shared on the number of dealers and stuff, even if one were to do certain basic calculations, the numbers that would be required for sales would be much higher than probably the 1,000 numbers that we are achieving this year. So, anything to suggest the path of how this is going, given you have the feelers now of how the acceptance by the customers or the farmers is happening. So some qualitative aspects would help us, sir, to appraise the progress more. So that if you could share on that, it will be helpful.
Yeah. So, like I said, we unveiled the tractor in the last financial year. So we took a lot of feedback from farmers, giving them a few tractors for usage in various markets to test and kind of, finish the tractor based on the customer requirements. So based on which we launched the product in May of this year. And since then, we are in the process of ramping up volumes. We started with very little production, 10 numbers in the first month. Second month, we increased it to 15, 20. Then, so we wanted to take it step by step because, as you know, it's a very competitive segment, and we intended to ensure that every single customer of ours is satisfied. And very happy to say that the performance of the product has been absolutely splendid, and the feedback that we are getting is tremendous. We are having repeat purchase. One or two issues that we had in terms of the product has been rectified during the seeding phase. So that kinds of gives us the confidence to now ramp up production and increase the number of dealerships that we will be serving. So right now we are at 56 dealers which are doing VST Zetor in the north. By the end of this year, we want to consolidate that at about 75-80 numbers. We will consolidate that figures, ensure that these dealers are able to perform with a certain unique number of volumes so that they are profitable. And hence, from then on, we will then scale up in the next financial year. So the plan is build, consolidate, and then build again. So that is the approach that we are taking. And I hope that clarifies your question.
Yeah. So, sir, I mean, given the competitive nature of this industry, I mean, how would you put our right to win the customer versus what already is? So how does that work? Because just wanted to understand that.
See, I will tell you very plainly that in terms of product differentiation, we are focusing on rough, tough, and reliable product. Point number one. Point number two is we are looking at how the customer can benefit in terms of productivity. But having said that, what we know very clearly in the market that there is very little that differentiates one product from the other. So that is where the importance of the dealership and the network comes in, where we believe that a profitable dealership will be able to service and value the customer much more, and hence we said that we will not push inventory to the dealers. We will ensure the dealers' profitability. Hence we are saying that we will build, consolidate, build. So we believe that the dealer's win is what can be converted to the brand or the product win in the marketplace. Because as you and in the industry knows, product differentiation is very little in this segment.
Right. So, sir, at what numbers a dealer becomes profitable with your product?
At around 30 to 40 units.
Okay. And as of now, across India, how much numbers would it be? I mean, you said north is around 56. So...
Yeah, 56 dealers to 60 dealers is what we have now. And we are consolidating now and getting them to 4 to 5 units per month so that they can get to about 40 to 50 numbers per annum. So that is the work going on, and after that we will build further.
Got it. And so lastly, on the numbers that we had shared, some targets of around 3,000 crores in maybe FY27. So that's still a long way to go till then. So we're at about 1,000. So you see that with all these three engines that we have started on the tractor side, that still looks somewhere achievable.
Tractor is only one piece of that big strategy.
Okay.
So one is tractors. Second, I have spoken about the small farm machines, how we are growing that small farm machines. The launch of the products are yet to happen in the small farm machines. You will find some disruptive products coming from the small farm machine segment in the coming quarters. I had spoken about it earlier. It's too early to give the specifics of it, but I think we will see that happening in the next coming 2 quarters.
Okay. So what's as I asked that those numbers that you target, that still remains sacrosanct, is it?
Absolutely. See, we
3,000
lost 2
crores of
years.
sales and stuff.
We lost 2 years to COVID.
Right.
I was, the effort of the company has been to ensure that we don't give further 2 years, try and do it in FY26, that is 1 year. But then, we currently have, like in the last quarter, I shared with you that we have a visibility of around 2,000. That looks very much there. So to get to that 3,000 number, it looks like we will have to move to FY27. But definitely that milestone is not something we will give up on, and we will definitely chase it down.
Okay, sir. All the best. Thank you so much.
Thank you.
Thanks, Ashish. Next in the line is Mr. Shreyans. Please unmute and ask your question.
I just want to understand why has your receivables increased to 70 days and payables reduced? Like, what are you doing with your working capital? Please explain that.
Okay. So payables, so receivables have gone up purely because of the government orders we have received and the supply which is in process. So I would say that by the end of Q3, it would normalize and come back to the normal levels of around 45 to 50 days of receivables. Payables is purely a function of when the payment is due, especially we are focused on clearing MSMEs on time. And it has got nothing to do with a particular management strategy to control payables or shorten the cycle of payables.
Okay, got it. And can you share a few bookkeeping questions? Can you share volume of Zetor tractors in Q2 and October?
See, we don't share specific tractor volumes of Zetor, but what I can tell you, it is going as per plan. But eventually, once we discuss with our JV partner, in the next financial year, probably we'll start sharing the numbers on Zetor separately.
Okay. And the revenue breakup of between tractors, SFM, distribution?
Yeah. For Q2 or H1?
For Q2.
Yeah, Q2, the SFM is at 185 crores, tractor is at 74 crores, distribution is at 26 crores.
And can you give same for H1 as well?
H1. We don't have that right now.
Maybe you can reach out to us on the email. We'll share you maybe those details.
Yeah.
Okay. One last question. We have taken a short-term debt for 7 crores. So why is that? That's for my business.
Yeah, better capital management, better working capital management. We had looked at see how to use some debt when it is usable instead of looking at kind of taking funds from our treasury.
Got it. Great. Thank you so much, sir. Just one question. Can you share, what is the power tillers? You are saying that new launches will lead to the growth, and current product is just leading to stagnant growth for the past 2-3 years. So all the growth will come from new products. That's correct, right?
Not really. There is expansion of market also happening. Only if you see 2 years back, we were at 38,000. Last year there was a drop, 36,000. But before we did 38, we were at about 32. So last year was a abnormal year with the monsoon, playing, kind of problems with the farming segment itself, and we saw industry dropping all across. But I strongly believe that this year with the rainfall, monsoon, and the spatial and timely distribution of the rainfall, it is all looking favorable, and I expect a strong growth this year in the power tiller business, because H2 of last year was abysmally low, and this year you will find that completely the opposite.
Okay, got it. Thank you, sir.
Thanks, Ryan. A reminder to the participants, if anybody wants to ask a question, please raise your hand. Next question is from Romil Jain. Please unmute and ask your question. Mr. Romil Jain, you have unmuted. You can ask your question. Hello? He is not able to ask the questions.
You can even type in the chat box.
I'll go to the next. I'll go to the next guy.
Got connected? Okay.
No, sir. I will go to the next person.
Okay.
Next, we will Mr. Sakit Kapoor. You can unmute and ask your question.
Greetings to the public, to the team, sir. Sir, when we look at your presentation part, as you yourself alluded to the fact that the H2 was very bleak for power tillers last year. So, what are our expectations for the current year? I missed your comment on the same. Since H1 we are lagging by 13% in the power tiller segment, what should be the expected number?
So this year, like I have said in last time we spoke, Saketji, we are looking at a 20% minimum growth in the small farm machine space.
Right, sir. And so when we say small farm, you are including all the three: power tiller, power weeder, and reaper, all combined.
Correct.
Okay, because
so the power weeder segment will grow more rapidly. Power reaper is a seasonal business. It will grow, especially in the Q3, Q4 space. And power tiller growth, will be seen more in second half of this year, because Q1 was down. Q2 has picked up, and we see from the October trends that Q3 is going to be pretty big.
Correct, sir. And sir, if you could give the reasons why power weeder have outperformed also on a base of 2000, the numbers are 3500 for H1. So what are the factors that has led to this increase, and what are we eyeing in terms of the number of units, and also the top line breakup, if you could provide us for the small farm equipment breakup between power tiller, reaper, and power weeders?
Saketji, we will not be able to give you a breakup in this particular reason is simple, that it is very strategic to us. What I can tell you is power weeder typically sells a unit up to about, let's say, 60,000 units, 60,000 rupees, okay, to a unit, roughly, power weeder. And the reason why it has been growing is the base is large. Like I've said before, we have been late entrants to this segment. We are growing rapidly in this segment. This year, we should be upwards of 8,000 numbers this year within just 2 years. And we expect in the next another 2 years, we should be 3 times that volume, minimum. The good news I can share with you, which I had announced earlier also, we will be manufacturing power weeders in India. With the scale up of volumes that has happened, we are rolling out the first power weeders this month onwards.
Okay. And sir, which category of crop are we addressing through these power weeders?
More than category of crop, it is the farmer segment, which is less than 2 acres of farm.
Okay. Small, yes, that is
small and marginal farmer, yes.
Okay, sir. And sir, about our, if you could give the splitter between the spare business, what we have done, and also we were also inclined to do some trading business with pumps, electric pumps. So where are we in terms of the inroads we have covered in
Yes.
that?
So we should be, last year we had 10 crores of business in electric pumps. This year we are growing that business. Now, the interesting part about electric pump business is when the rainfall is extremely good, the pump is rarely used. So you will find a bit of a slowdown in the electric pump industry as a whole, especially for the agri segment. The domestic segment is very different, but in the agri segment, you will find that the pump usage reduces and hence the sale reduces. But we expect a growth because our base is very small. Last year we had done 10 crores. We should be able to do upwards of 15 crores this year. That is what we are looking at. And we are operating in only 6 states at the moment. And we will consolidate that as we move forward. And the distribution business also is expected to grow at about 20% this year. Last year we had done about 100 crores of distribution business.
Distribution means the spare part, the spare business.
Spare parts, oil.
Okay. And sir, about our, I think the precision unit at Mysuru, what is the contribution there from that?
Yeah, so I had spoken earlier about the precision distribution business, looking at the China Plus One opportunity. Very happy to share that we have garnered a few customers in the railway segment, also precision component supply to metro rail kind of projects, also precision component supplies to few engine manufacturers. So we can see good growth, but I wouldn't want to share the numbers at this moment until we scale up. And but I think it is working out to our strategy.
So, sir, a ballpark number of what we did H1 at 474 crore. What should be the contribution from the precision part in terms of, I think so, the alignment?
See, precision component division has both businesses, which is internal supplies to VTTL and also the external business. Currently, the external business is very small. That is why it is too early for us to give out any numbers. But as we grow, I will definitely share with you. Probably end of this financial year, I will start sharing the numbers.
Okay. So as two small points, last year, as you mentioned, H2 was a small quarter. I mean, it was very bleak last year H2. So this year we are starting on a very low base. So what should we anticipate in terms of H2 in terms of the revenue profile? And also, sir, for the treasury book, what steps are we taking to further invest money in our business and lower our treasury component?
Yeah, so two parts to the question. One is you are asking how would be the outlook of Q3 and Q4, which is H2. I think H2 should be like given the good monsoon, given the good situation in terms of reservoir water availability and the crops. I think H2 should be pretty big this time. Interestingly, last year the H1 was pretty big and H2 was very bad. This year, I would say H1 was kind of flattish except for the Q1 drop that we had about 30-40 crores. But if you see Q2, we have caught up. And in fact, we've got a slight growth. And in Q3 and Q4, we should be able to grow at the rates we always wanted to grow at about 20 to 30% kind of growth we should be able to achieve.
Okay. And lastly, on the margin part, I think so earlier you did alluded to the fact that in order to grow the business, we will be sacrificing margins, pressing more needs on marketing and on the R&D part to develop more products and be more relevant in the market. So where are we in that journey, sir?
Thank you for that question. Very important question that you have asked in terms of the long-term perspective. See, the margins have been maintained, as I had said, at 13.33% on an operational level, and I had said we will always be on the higher side of 11 to 13%. We'll be closer to 13. So that is where we are. And of course, the money that is being spent is on product development. We have spruced up our R&D further, and we have enhanced the number of people working in our R&D. Today we are 80-90 strong R&D personnel. We are working on multiple platforms, including our entry into the US market, developing platforms of various kinds of engine. We are talking about developing disruptive products in small farm machine segment. And in the next 2 to 3 years, you will continuously hear from us about launch of products in various segments and various markets. So extremely important step that we have taken in terms of investing our money, which is the money that the company has managed to accrue in terms of organic growth. And in terms of using our treasury money, we are also looking at good opportunities that may come up in the inorganic growth opportunity as well.
But there is nothing in the annual, sir, which we are working currently.
We have couple of things are on the annual, but nothing to announce at this moment in time.
Okay. And lastly, sir, what investors have always been looking for the land value. When can we expect that unlocking, sir? Do we find a case currently for that to be realized, or we can continue to hold on and ride on the same?
See, we won't, I've shared this before, we will not sell the land just for selling the land purpose. What we are looking at is the appropriate opportunity for which we will need to generate cash. At that opportune time, we will look at the best resource of raising funds. If the better option, if it is to sell the land, at that point, we will look at selling the land. Otherwise, we will monetize that. So the board has not taken a decision on that yet. So I think there is nothing to announce at this point in time.
Correct, sir. And sir, this time in your opening commentary, I missed your point about how is the raw material basket behaving. I think so the prices for some of the engineered product, especially for the steel, prices have gone up. So how well are our margins protected? Or if you could give us some color, what is the RM basket currently shaped up?
Yeah, so the RM has not been influenced through commodity pricing in Q2, but it is more to do with our product mix. As our higher horsepower volumes are growing, and especially when it is a new product, there is a bit of a margin pressure when the product is new for a few months before it normalizes, and hence the material cost is looking up at a percentage or so at the company level. Other than that, there has not been any commodity pressure to say in Q2, but looking forward to Q3, it is hard to predict, but all around the demand doesn't seem to be growing, and hence I don't see any commodity pressure in terms of pricing or the cost to go up in Q3 as well. That is what everybody says, but you guys should know more than me as you're talking to many, right?
But sir, can you provide the mix? Then it will help us out better. What are the key components of RM?
Yeah, so steel, you have your castings, your forgings, your sheet metal, your rubber. These are the larger items. And in steel, you have cold rolled, hot rolled, CRHR.
Correct, sir. So the prices there have moved up.
Slightly CRHR. In Q2 quarterly settlements, it hasn't played much of a role. That's what I was trying to tell you.
Okay, sir. And lastly, sir, that join the queue for the pump parts, sir, where are we sourcing those pump, and what is the range horsepower pump?
So we are sourcing up to 10 horsepower, both domestic, centrifugal and borewell. We are sourcing mostly from Coimbatore and Ahmedabad.
Okay. So any branded concern, or we are they are co-developing only for us?
They are not really branded players, but what I can tell you is they are supplying to various brands.
Right, sir. All the best, sir.
Thank you.
Will be hearing more of the company, sir. Thank you, and
Thank you.
all the best
Thank you.
team.
Next is a follow-up question from Mr. Shreyas. Please unmute and ask your question.
Yeah, hello. Good evening, sir. This is Romil Jain here. Unfortunately, I think there was some disconnection. Can you hear me now?
Yes.
Yeah.
Sorry. So, sir, first question from my side is just to understand, October month, we have seen a very sharp recovery in the volumes, right, on the tractor and tiller side. So just want to understand whether it is more related to our distribution network and, the acceptance of the products and all, or it is more prevalent in the industry because industry also has picked up well. So little sense on that.
Yeah, so definitely the industry growth has helped. I wouldn't deny that. But the effect is also so pronounced for us because we have been working consistently on growing the network, growing the number of products that we have in the offering, and also our entry into the new horsepower, higher horsepower segment. So as I said, as we increase the number of high horsepower production and ramp up, you will see the sales figures growing for us. So that is one segment that we have never been present seriously, which we are now, and you will see as we ramp up the volume, sales volume also increasing.
Okay. And sir, so far this year, I think on the volume side now, we are much more flattish in terms of tillers and tractors. I think tillers would be down by 8-9%. But so what kind of growth do we see for the whole year in both of these segments?
So tiller, I would expect at least 20% plus growth by the end of the year.
For the full year?
Yeah. And tractors, I think we should do much better growth than, because considerably low base we have from last year.
Okay. This is excluding the Zetor, I just wanted to understand.
It will be including Zetor, because see, larger horsepower segment will play a larger role in terms of increasing our volume, because as we can see in Q1 and Q2, if you see the less than 30 HP segment, it has not grown across the industry.
So this number that we have given also includes Zetor, right? The tractor.
Yes. Whatever we have given includes Zetor, but in Q1 and Q2 the volumes are low comparatively.
Okay. Just on the tiller side, I think we are expecting very strong growth. So market share earlier was about 65-70%. Is it going to remain so or maybe increase from here, or you are seeing competitive intensity increasing in tillers as well as the overall SFM space, the weeders and everything?
Definitely more and more players are entering that segment, but we don't see too much of effect in the power tiller space, but you can see larger competition in power weeder segment. But what we feel is the market share is not the key here, because once you're at 70%, what we are looking at is how do you gain more volumes, how do you create the industry, and that is what we are doing. So that is why we are saying Q3, Q4 should be much higher than last year, and hence we will end up at around 20% growth.
Okay. How much would be the penetration of finance in this tiller product? Tillers?
Penetration overall currently is upwards of 4-5%, which was 0 2 years back, or rather 1 year back.
Okay. So that is also helping the growth of the tillers.
Yes, definitely in some markets it is definitely helping. I have seen dealers who are doing retail finance up to 30% of their volumes now, which was never the case earlier.
Okay. And the reliance on subsidy, as you have earlier also alluded to, is no more very important element.
See, subsidy will always play a role. Like I have said, I don't deny that subsidy will not play a role. What I have said always is subsidy becoming the key factor for decision making to buy power tiller will not play a role. Because see, if it is like this, if some government declares a subsidy, every farmer wants it.
Correct.
Right? But that doesn't, earlier what was happening was only when subsidy was declared, people would come to buy. Now that has changed completely.
Okay.
With DBT happening.
Okay. Just one macro question to understand, your growth trajectory over the next 2-3 years, and reach the targets that we have given. So broadly, I think, we have 4 segments. So tractors, tillers, SFM, and, the distribution part of the business. So
Tillers is
broadly,
part of SFM, tillers. So we have 3
sorry,
segments,
yeah, tillers is
tractors,
SFM.
SFM and distribution.
And distribution. So just, can you just give us a sense of, the growth trajectory in each of them? Where do we see over the next 2 years, 3 years, which one should grow faster, and some sense, and how much would these segments contribute in terms of overall top line?
Yeah, so I've said this before also. These are very different and very unique industries. Tractor serves a segment of customers which are more affluent, who can afford 5 lakhs to 10 lakhs, 12 lakhs of investment. Whereas the tiller segment is a marginal farmer who is less than 2 acres of land or 1 point, who can definitely not afford a tractor. And distribution is all about getting closer to the customer, irrespective of what segment you're operating in. So these are 3 distinct segments. The bases are different. For example, the distribution base is at 100 crore base. The SFM base is at 600, 700 crore base. And tractor is at around 300 crore base. So you will find, and necessarily the tractor will grow based on how you can expand more into the northern markets with the higher horsepower, and the compact tractors into Europe and the US market in the long term. And SFM you will find growing based on, competing against non-consumption, that is making first-time buyers or introducing people to mechanization for the first time. So that is a very different way of working, very different way of converting the customer. And the third aspect is distribution, which I've already shared. The number of counters you open and how closer you are to the customer will ensure your growth. So there is no uniformity in this. So there is no, particular percentage I can attribute to each one of them. But what I can tell you is all the 3 are getting significant importance. There is no particular segment that we will focus more or less.
Okay. And lastly, sir, exports is also a part of our strategy. So, to reach the 2,000 crore and then subsequently 3,000 crore kind of top line, how much would the exports contribution be embedded in this?
Absolutely. Thank you for that question. So 2 years back or three years back, we were at about 3% of international business. Last year, we closed at about 13% of international business. We are going to take it to about 25 to 30% of our business.
Okay. In the next 2 years.
Next 2 to 3 years, yes.
Okay. And that would be largely at a similar ROCE levels?
Yeah, the ROC should be good. The profitability is good because the pricing opportunity in the international market is better.
Okay. Got it, sir. Thank you so much, and wish you all the best. And we'll connect once again. Thanks.
Thank you.
Next in the line is Mr. Arjun Khanna. Please unmute and ask your question.
So the first question is, in terms of the facility for power weeders, you mentioned we have started manufacturing. So this is the 6,000 unit facility that you are referring to, sir?
Yeah, so we have the power tiller facility where we have installed capacity of about 72,000 tillers that we can do in a year, which we can take it up to 1 lakh power tillers. Using that same facility, we are looking to produce the power weeders as well. So initially it will be limited production. This year we are looking at, let us say, 100 to 200 units from the plant per month, very little numbers. But in the next 2 to 3 years, we expect the plant to do at least 1,000 to 2,000 weeders per month.
Sure. So, effectively, so power tillers, we used to understand it was 60,000 units. Effectively, you're saying through debottlenecking, it's 72. And with further debottlenecking, you think that can be 1 lakh units, which is fungible between power weeders
No,
and power
the
tillers.
third is 1 lakh will go through an extra shift.
Okay.
72
Sure.
through
By third shift.
debottlenecking
Right.
and 1 lakh through a third shift.
Right, sir. Right, sir. This is helpful.
Yeah.
Sir, if we talk about, we also talked about earlier that potentially signing a JV with a Japanese blade manufacturers, Kobayashi. Is there any update on that, on the same, sir?
Yeah, so what they can tell you is that project is on hold right now. It is not dropped, but because the JV partner Kobashi is taking more time in terms of moving certain technologies and certain products which we wanted in the JV. That decision is not yet made. And unless those products are moved to India, we don't believe that we have a real scale-up model with blades alone. And hence, that project is on hold.
Sure. Well, helpful.
Yeah.
Sir, just on the Zetor joint venture, could you help us understand in terms of the international bit? So while you talk about the domestic bit where you see us reach maybe 1,000 units for this year and maybe 1-2% of the market over the next couple of years, what is the international agreement with them? Are we allowed to export the production that we make in India?
Yes, we are allowed to export. So we are allowed to export to the VST channel as VST brand, or rather VST Field Track. That is a brand we use abroad, and as Zetor brand through the Zetor channel. So the
Sure.
VST Zetor joint brand will be only for India.
Oh, okay. Sure. This is very helpful. Sir, my final question is just in terms of growth for this year. So while we are forecasting a very strong second half, is it related to release of some subsidy, or is it just the market growing? What are the key drivers for this very strong forecast for second half of FY25?
Yeah, so subsidy I don't think will increase. I mean, last year also it has not increased. Year before also it was almost the same. Last year, what really happened was that demand went down because the rainfall affected agriculture as a whole. So it was nothing to do with subsidy. Again, this year I don't see the subsidy amounts increasing. So subsidy playing a role in terms of growth is very minimal now. But having said that, like I said to the earlier person who was raising the same question, if a subsidy is announced, there is no farmer who says, no, I don't want it. Everybody wants it. But the question, the real reason that remains is that the purchase decision of buying a machine is no more dependent on subsidy. So subsidy really doesn't play a role in terms of increasing or decreasing demand per se. Number one. Number two, why second half will be buoyant is because of the same fact that I told you, that acreage has gone up, monsoon has been great, reservoirs are full, minimum support prices are, better. So in every sense of the word, it looks positive. And that is seen in October. And, we hope that that same sentiment continues through to November and December.
Sure. Thank you and wishing you all the best, sir.
Yeah.
Thanks, Arjun. Next in the queue will be Mr. Agam. Please unmute and ask your question.
As you spoke on the demand front and how things are playing out with the new product launches and all. So everything as per the new product, the demand is the response has been so far good or as per expectations. The monsoon is coming in our favor. So what one thing is which according to you would be worrying or you would be seeing? Any one thing which should be a bother or a cause of a concern, maybe, which you are, looking at?
So the one concern that I have is on the bottom line. So while I am saying to the earlier caller that the commodity prices shouldn't come under pressure in the coming quarter, which doesn't look like because demand is slowed down almost across markets. I hope that doesn't reverse itself and the commodity prices shoot up because of an extended war or the Gulf War or whatever reason. I hope that doesn't happen. The second aspect that I would say is, which is not a worry, I would say, but I would put it as a challenge in front of us to accelerate our execution. So that is something that keeps us up all night and every day. So we have to accelerate our executions. Our projects are all in monetization phase. We have to consolidate the dealerships that we are opening in the northern markets. We have to consolidate the products that we are launching in the European markets. We have to accelerate on the product development for the American markets. So this is something of a challenge, I would say, or rather, which enthuses us to come to work every day.
This helps. Thanks a lot and wish you the best.
Thank you.
Thank you.
Next in the line will be Mr. Siddharth. Please unmute and ask your question. Yeah.
Yes.
Sir, could you give us the bifurcations of revenue for tillers, tractors, and spare parts? Sorry if I missed it out earlier.
Yeah, just for information, I will definitely give you the revenues, but just for information, it is all uploaded on our website as well, just in case anybody wants to take a look at it later on as well. While I'll just give you the H1 revenue figures as well. Somebody had asked for H1, and after that I will give you Q2. So H1 tractors is at 130 crores. Small farm machines is at 274 crores. Parts is at 53 crores. And then others is about 17-18 crores.
Okay, sir.
And Q2, can you just put it up? Yeah. Just a second. Yeah, Q2 small farm machines is at 185 crores. Tractors is at 74 crores. Distribution at 26 crores and others at 4 crores.
Okay, sir. Sir, and just one more thing on the tillers part, particularly, I mean, any sort of discounting or something is saying, or it's at same realization levels what we saw earlier?
No discounting.
Okay.
No discounting. I mean, are you asking that we will push volumes through discounting? The answer is no.
Okay. Okay, sir. So there is enough demand, so that can be absorbed without any sort of.
The issue in tillers is not pricing or what clearly is, like I said, creating first-time buyers. It's industry creation. So we are taking these machines to first-time mechanization users.
Okay. Got it, sir.
Yeah.
Okay, sir. Thank you.
Gerald, we can take the last question.
No, due to lack of time, that was the last question. And do you want to make any closing comments, sir?
Yeah, so thank you so much and wish all of you a very happy Diwali. I should have done this in the beginning. Happy Diwali, season's greetings to every one of you. Thanks to have taken the call and look forward to being in touch in the next quarter as well. Thank you.
Thanks. On behalf of B&K Securities, we thank all the participants for joining the call and thanks to the management for taking time out for the call. Have a good day.